Welcome to the Captain's Blog. I am Dave McDonough, Senior Vice President and founder of Flagship Wealth, powered by Trilogy. Last week, we ended flat on a holiday-shortened week, but guess what? The government was open on Good Friday. Inflation numbers came out, and get this, they were good, not too hot, not too cold. We're going to call it sticky. That's the Fed's term for it these days. We ended the quarter the best start to a year in over 5. And again, class, we know why. The market is betting on the Fed to start cutting rates to spur economic growth. But guess what? The economy doesn't need to be spurred at this point. What needs to be spurred is inflation. But yet experts out there are betting on cuts, and the market continues to reach all-time highs. Did that continue this week? Did the fear of missing out trade continue? Or did fundamental investing come back in vogue? Here's your week in review. I guess we'll just cut right to the chase. Yes, folks, the market can go down. Went down a little over 1% for the week. Dave, why are you happy about that? You're asking out there. Well, listen, folks, it is healthy for profit taking, especially in the meme stocks. There are certain stocks out there that you out there are asking, maybe a former president's media company that doesn't make any money. Well, that stock is down 40+% over the last week. Those are the FOMO chasers, folks. Those are the people that are chasing returns, not you out there. You believe in the rebalancing and investing in fundamentals. What is happening in this market is what I like to call repricing. If folks out there and experts believe that interest rates are going to be lower, they bid these stocks up. Well, the Fed is now out there on the tour telling folks, we're not putting the binky back in your mouth anytime soon. The economy doesn't need it. Well, again, the market needs to reprice. Profit taking needs to happen, especially in those high-flying stocks that have taken off since the end of November. What also has happened since the end of November, interest rates back at those levels, oil back at those levels, less money in your pocket. So again, take an opportunity, take this opportunity that the market has given you to rebalance your portfolio. And again, I stress, do not chase those meme stocks. Here's what to look for next week. Typically, the first 2 weeks in April are what I like to call the confession period. Corporations are out there reporting their earnings and why they didn't make them. Typically, the second half of April is where corporations come out and brag about their results and how they're going to do going forward. Do not be surprised to see, continued profit taking. But we're not panicking. What we understand is that the profit taking is creating value for long-term investors. Here's your personal finance tip of the week. To all you procrastinators out there, it is not too late to save money on your taxes. Consult your local accountant for more details. Can you contribute to an IRA account, a simple IRA, a SEP IRA? Can you put more money in your pocket and less in the U.S. Treasury? I think it's worth a phone call. So thanks again for checking in. We'll see you next week on the Captain's Blog.